Alright guys, what's going on? It's Eric here. We're about to get into reviewing some of these trades. So I know a lot of times we talk about, things going right in the trade. But today I want to focus on when things go wrong. I also want to kind of go over with you guys how to protect yourself when you're trading. And some of this stuff I do go over, more thoroughly in the course, but hopefully this kind of gets you the gist of it. For those of you who are, who do have the course, you can kind of revisit this and get a better understanding. Forgive me if I kind of go off a little bit because it is after hours, so the market's still moving. I'm just kind of looking at some stocks, but let's go ahead and kind of get into this bad boy here. Today was a horrible day in the market. It was red. I mean, horrible if you were, day trading. You guys seen I took my profits pre-market. I didn't trade all day. I sat on my hands all day. Sometimes you got to do that. Not every day is going to be a trading day, but when it is there, you need to take advantage of it. If you're a short seller, you probably was, loving today, especially if you are short selling AERC, because that thing dropped like a rock. As a matter of fact, we'll go back and see what exactly happened. But we'll touch on my trades, then we'll go over that, and then we'll discuss a little bit on, how to be able to protect yourself and manage your risk a little bit more properly. But yeah, so let's kind of go ahead and get into it. So I traded PPSI and FWBI today in pre-market at the same time, and one trade went well, the other one did. So let's kind of take a look at them. We'll start with PPSI. This is the trade that went great, and pretty much how it played out. So let me pull this up here. Let's see when the alert went off. I think, don't quote me on this, but let's see. Yeah, PPSI was on the watch list. Even better. So yeah, I mean, guys, when I'm doing that watch list, I'm doing just kind of due diligence, and I kind of went over how to put together a watch list. But let's just kind of look at this here. So this was pretty much PPSI all day. Clearly, I got in and got out at a great time. I don't know what to tell you guys other than having a strategy, it helps. So PPSI was already on my watch list, right? It ended at 10:55. Sorry. Yeah, right here. Ran all day, even after hours. No notable news. So I figured we'll try to make some movement pre-market, right? Now, coming out the gate, just dropped, which sometimes is a good indication of how the market is going to end up for the rest of the day. Obviously it can always turn, but it kind of stuck with what it did. So kind of knowing that too, I was already kind of cautious. Whenever the market is green, I'm very optimistic with making my trades. Stocks usually follow the market, like I teach you guys. But if it's a red day and I'm a bullish trader, I'm going to be more conservative. I'm happy with taking a little bit of percentage and calling it a day. With this one, I think it was only like 12% gain, but a couple $100 nonetheless, better than nothing. So anyways, it's on the watch list. I'm looking at it. The alert for it didn't go off until the same time that FWBI was, kind of going off too. As you can see right here, FWBI crossed on the VWAP. A lot of times when stocks are crossing on the volume weighted average price, I'm going to be looking at it to see if it starts to have a bull run. Okay, they had an announcement. Boom, there's a catalyst. Another reason for me to kind of get into it. And then it started amping up and hitting the highs. So I'm looking at that stock, and then all of a sudden PPSI, which was already on my watch list as well too. I don't think FWBI wasn't on my watch list. I'm sorry, that was an alert. But PPSI crossed VWAP, and I was like, oh, okay, let me go ahead and look at this. Now these things both began to run at the same time. You guys know I don't like to trade more than one stock at a time if I don't have to, but sometimes you got to. Sometimes the most I'll probably do is 3, maybe 4. But this happens to be one of those cases where they both started to run. So the alert went off right around here. Okay. So what am I doing? Waiting, because I know it's already a red market. I'm waiting for it to pull back. Meanwhile, it's pulling back, waiting for that turn to see if it's going to break the new high. But at this point here, it did not. Okay? So you kind of got your eye on it from that point on. Now, it did it again. At this point, it became in bearish territory, and I didn't care. But then we got notification that, hey, it's over 12, which means it broke over here again. I didn't get into the stock until like 11:44 was my average. Why? Because I anticipated the fact that this thing was going to have at least a little bit of a pop. I could kind of tell based on the moving average convergence divergence right here. Let me enlarge this to make it a little bit easier for you guys. You guys kind of see here, this is alerts coming through, blah, blah, blah. That's pretty fine. But let's look at the chart too. A little bit more detail. Here in pre-market. Now again, if your broker doesn't allow you to trade pre-market, you need to go ahead and get Webull, Moomoo, one of the brokers that'll let you do it. All right, I'll put all the links in the comment section. But let's take a look here. Look right here. You see how the moving average divergence didn't have much of strength right there? Now it's in the bearish territory. It tried to go back down, but then it came right back up. That was a good indication that it was gonna, be very, very bullish. Yes, it is overextended, but keep in mind with the relative strength index and it being overextended doesn't necessarily mean that it's going to have pullback immediately. It's going to start to come back down, but that means it's probably going to create a newer high. So you got to understand the indications that you're using and how to read them. Okay. So at this point, I was like, okay, it's worth the risk for me to try to get in. Obviously, the low here was like $9 and change. It was like low tens. So I was already looking at it from there. And then when that broke into bearish territory, got the golden cross, that was great. So I said, you know what, let me go ahead and get in, see if I can continue to ride this wave. Even though it started to lighten up on, the indicators right here, we had another turn of events, all right? So I quickly bought into that one and then quickly sold out as it was beginning to establish a new higher low. I didn't want to wait and try to, grind this thing out. Obviously, you got your candles giving you indication here that it's going to, hold up. But then you're looking at level 2, you start to see the sell orders coming in. So I'm like, let me go ahead and cut it. It's, it's a bearish market so far in the pre-market. I'm not going to push my luck. Let me go ahead and take my profits while I can. And I had got out, I think it was, let me pull it up here. Kind of like 12.90. I think this thing ran to like 13. So I was okay. I was happy with that little gain. 500 shares in, 44. Out at 12.90, not too shabby. So I didn't quite nail the top, but I was kind of close, which was good. Because on that pullback, it happened pretty quickly. And that's what usually happens in the bear market. So that's how that trade went. I planned accordingly. I looked, already had notification from the alert to look at the stock. It made its move. It fit my strategy. My entries and exits were there. I established, a good level of support, good levels of resistance. I had a mental idea of where I was going to, take my loss if it was going to happen. But fortunately, because most of the indication was in my favor for it to continue to rise, profited. That's how it pretty much works. Again, your strategy will never be 100%. You're going to have times where it fails. Today would have been a day where I probably would have had a lot of failure if I wasn't as disciplined as I am from doing this for all these years, okay? So that's pretty much how PPSI, played out. Now let's look at the other trade that didn't play out well. So I took 2 trades. One went really well, one didn't do so well. But the one that did really well was more than enough to cover the loss that I had from the one that didn't go really well. So let's take a look at this bad boy. And I cut this one quick. This one was only like a $95, $100 loss, I believe. So let's take a look here. Now, we already knew FWBI was on the, I had it pulled up, the other monitors, just looking at the chart. And we had news, we had a catalyst. It had a pretty decent statistics for me to want to get in the trade, which is why I took it. So what did I did? I did the usual, but unfortunately this strategy did not play out the same way. Let's take a look. It's alerted, goes off, it pulls back. You know, I'm gonna wait for the pullback. Let me see if it breaks a new high. It did break the new high, so I got in. But guess what? It began to grind. The new highs, when it was moving over, the moving average convergence divergence was not establishing higher lows. So that right there is my first red flag. Then you get a candle like this that's showing you that, hey, it's a lot of volume coming through, but it's not, you know, really moving. Now keep in mind too, this is on the 5-hour mark. I tell you guys all the time, watch the time frames of, you know, 5 o'clock, 6 o'clock, 4 o'clock, because those are, you know, times that institutions are opening up and orders are getting executed. So you'll get a lot of volume all at once because, you know, generated orders from maybe previous days or whatnot, maybe getting executed. So there's my second red flag. I got a big green candle, but no movement. So that right there is telling me, hey, might need to look at start exiting. With this trade here, my goal was to have it break out and, you know, take, you know, decent profit before it starts to let up. But on the breakout, it began to immediately come back down and it was not showing no strength. Those right there, red flags, red flags. I'm telling myself, okay, you know what, it's time to just bite the bullet, exit this trade, get over it. Good thing I did because look, it just sank the rest of the day. Had I not paid attention, I could have easily lost a lot more money than $95. Could have been a lot more lost. So don't be afraid to cut your exit, you know, to cut your losses quickly, guys. It happens. And even if you did cut your loss here, and let's say it began to rise again, that's fine. Just go ahead and reset. Sometimes that happens. You get faked out, you know. And speaking of fake outs, with today being a bearish market, there was a lot of fake out breakouts in the market today. I mean, tons of them. You could have easily got caught up if you don't know what to look for. And if you don't know what to look for, study, take courses. I don't know what to tell you, or learn the hard way, like I had to do years and years and years. But yeah, so that was pretty much how FWBI went and why I exited that trade, because it gave me a lot of indication that this thing wasn't going to go anywhere. You know, so that was pretty much it. Let's talk about AERC. Now, if you're not familiar with this stock, AERC, it's a recent IPO. This is why I tell you guys I don't really like to trade IPOs. If I'm gonna get into an IPO, it's gonna be a long-term investment typically. It's kind of why I'm waiting on things like Rivian to come down and, you know, other IPOs that I was looking at. But yeah, this one here is a recent IPO. So this is what, the third day for it? 24th. Yeah, that was the 30th. So like the weekend. Yeah, this thing's only been out for a few days. It opened up at like $80. No, it opened up at like $30, and it ran all the way to like almost 100. Oof, I feel sorry for anybody who was holding that. Obviously, I wasn't. It's out of my price range. I don't trade stocks that go that high. My stocks run that high, but I don't trade stocks that go that high, or even that start out that high. So pretty much what happened here, I think we kind of talked about this on the alert too. I mean, there's been some nasty plays this last few days. There was one yesterday that was crazy pull. Let me see if I can find this AERC. Because I mean, like, all the rooms, most of the good rooms where good traders were talking about it. And yeah, this was, halted down 48% on no news. From 120. I mean, overall today it lost like 90%. Look at that, $28. That's brutal. So yeah, I mean, it's tough, man. So when you're in a stock, especially an IPO, and it hasn't established itself, like that's kind of why I'm still hesitant to get in Rivian. You know, there wasn't no orders. It's not many orders out yet. It's, you know, they haven't established themselves yet. So it's a good speculative growth play, but Same thing with AeroClean Technologies. No, I don't know why this thing tanked. Maybe look into it a little bit more and see what happened. But yeah, this thing just plummeted. Really, guys, there's kind of no way to protect yourself from something like this other than managing your risk. You can't kind of control this outcome. All the people that probably bought and sold and bought and everything here, if they're not insiders, probably didn't know that this was going to happen. And so once that drop happens, you see all this volume come in and people trying to sell. This thing is down to $24. Okay, that's brutal. Let me know if you guys were, if you brought into this IPO or if you traded. I want to hear from you. I want to hear your thoughts on that because, geez. But that was pretty much the trades for the day. So let's talk about real quick how to protect yourself sometimes when these, like even when the alerts, scanners, whatever you might use to be able to find stocks kind of happens. Just because the whole market was red doesn't mean that every stock was red. There were still some green ones. It's still some, bigger caps sometimes do a lot better during red days during the market. So it kind of varies. Like Tesla ran pretty good today. So that was, one that was good to look at. Let's take a look here. I'm sorry, my computer's running crazy. Let's take a look here at some of these, like CPIX. When the market's choppy like this, or you get a lot of fake out breakouts on a red day, this is where a lot of revenge trading happens, and you'll find yourself doing this quite a bit, especially in the beginning. You get in the trade, you lose it, but you cut your losses pretty quickly. Now you're waiting for it to come back up. You know it's a red day, but you're, super trader. You want to go and fight against the market, and you try to get in on other breakouts. Boom, and it turns on you. And you do it again, and you do it again, just kind of hoping that the market's going to eventually turn. Sometimes you got to just learn to walk away. Like I said, today I sat on my hands. I only traded pre-market, and then I stopped. That was pretty much it. So when you're looking at something like this, CPIX, because I believe that one was on the, is that on the watch list too? Let me check. Yeah, we had CPIX on the watch list. So you could have profited from this one, even if you're a bullish trader. The thing is, you just want to make sure that you understand where the market is looking at the moment. So here, even if you utilize the strategy that I use, where you wait for it to pull back, show up, drop on you right there. So there's one drop. Boom. Rising again. And another drop. So you want to protect yourself by sticking to your plan and managing your risk properly. No matter what the market is, honestly, that's something you just got to do. If you're having trouble with managing your risk, message me, let me know, and we'll talk about it. I'll put together a little, strategy or something that helped me, that'll probably help you, as well too. But this is pretty much a couple of fake out breakouts. I mean, it did break out, but it didn't really reach too high. It broke out probably for like $1 and then pulled back, and that was it. So the key thing you want to know, let's say if you're using that strategy where you're trying to catch a stock before it breaks out or even ride momentum a little bit, first of all, decide which direction you're going, whether you're bullish or bearish. When the moving average convergence divergence turns over to the opposite side of what you're wanting to do, you need to look at the strength of it, how far it's gone up, and if there's any indication that it's gonna happen. So the way to kind of determine that, let's say if you're a bullish trader, right? Look at this area, for example. Let's just say you got in, you're following the moving average convergence divergence. You see it's oversold. It's not oversold. And then you're deciding, okay, I'm going to get in like right about here. I think this is a good area to enter. Now you see that this is rising up. The relative strength is going up. It's going up. But as it's getting to its peak, because it's always going to be a peak right here, it's not really moving much price-wise. That means that's as strong as it can get. So it's got to come back down, right? Okay, now it's come back down. At this point, it's basically trading sideways in this minute. Now it's beginning to break out, push up a little bit. You don't see any kind of long candles, long wicks, a lot of orders coming in on level 2. that should let you know that, hey, this thing is probably going to die down again and bring more selling pressure to it. Because usually when the momentum breaks out and the stock begins to run, it's going to be in these key areas. That's usually where the strength shows. As you can see, like right here, as it's turning over, guess what? Strength is showing. And if you're not seeing that at the moving average convergence divergence and it's beginning to come back to the other side down here and come down, just go ahead and cut your loss, or, you know, get out. I mean, obviously it's not likely that you probably nailed the bottom, but if you did, great. Just go ahead and cut it and wait and see if it runs again, okay? Sometimes that happens, and sometimes your timing might be off, but that's just something you want to look for. Don't sit there, hold on, and hope. Let the stock tell you what it's trying to do, because it's gonna show you. Looking at level 2 is going to be very important. Looking at the orders being executed and understanding, you know, what your indications that you use are telling you. Now, again, this is just me using moving average convergence divergence and relative strength index. Some people use other things. You know, you might want to use stochastic indicator. Some people use Fibonacci retracement. Whatever it is you use, you trade. Understand what it is telling you, and you might need to practice that more often, in and out before you actually, you know, trade with it. You can do that during paper trading. But that's pretty much it for, you know, just kind of reviewing this stuff here, guys. Hopefully you learned a little bit something. And again, this is just kind of how I'm looking at the market, how I trade it, what's been making me successful. Don't follow me, develop your own. That's what, you know, that's the whole purpose of this. Read the books that are in the learning lounge that I got there for you. All that stuff will help you, and just keep practicing this over and over, and, you know, you'll get better with it. While we got this up real quick, you know, let's kind of take a look at GRTS. I think that's one of the volume leaders right now, after market anyway. Oh, OP is kind of up there. Let me take a look at that too. What's that looking like after hours? So yeah, so something like OP, about 5 million. Let me pull this up here. Not much stats on it, but 5 million volume. I wouldn't touch this after hours, it's too light. Look at that, you can see nothing there, level 2, a lot of sell orders, this thing is gonna go down. Big block right there at a big wall resistance there, so that's not, you know, nothing to look at. Let me go back to GRTS like I was going to. I think that one is just up because it's the highest percentage gainer, that's why. But, so GRTS, and this will probably be on the watch list for tomorrow, guys. Looks pretty good. You got some support at 13, 1280, a little bit, 1213, so right now it's coming back down on a moving average, so let's kind of see where it'll hold support at. Right now you got a strong sell indicator. Volume's thinning up. Again, this is after hours. You're not going to have much volume, so that's kind of expected. You know, kind of watch and see where this thing ends at for the rest of the day. But yeah, so reading that level 2 helps you out. Obviously during the day, during the market hours, this thing is moving a lot faster, but you can still see bigger orders. Be aware of fake orders. Like I tell you, just kind of put all this stuff together, guys, and from there, you know, just kind of form your plan. So, might seem like I'm all over the place. Obviously, the course puts this all together for you to practice and what to look out for, the steps to do it in the right order, what you need to know. But those of you that haven't understand what I'm talking about, those of you who trade understand what I'm talking about. Beginners, go back and learn. You don't want to take the course. A lot of free stuff in the Facebook group. Go look at that. And all that good stuff. Ask questions. We're here to answer them for you. But yeah, that's pretty much it. So this thing had a nice run. I'm definitely watching this one tomorrow, guys. But yeah, that's pretty much it. So hopefully, you know, you got something good out of this. But until then, stay green.